This is a very important message if you have a mortgage. Hi, I'm Kimberly Ritter, broker associate and realtor with Homes by the Ritter Group at Carolina One Real Estate. I hope that you and your family are really healthy and finding some time to really enjoy each other during this time. Since the CARE Act was released, I have heard many talking about not having to pay their mortgage. Remember, forbearance does not mean forgiveness. Let me first say that this is not anyone's fault. If you have been laid off and you cannot pay your mortgage, please reach out to your lender and talk with them. But it is important to understand what you may be signing. So let's do some mortgage forbearance math, if you will. Ann and John have a mortgage. They currently pay $2,500 per month. John loses his job and gets laid off from work. John hears the news about forbearance and how if you've been negatively impacted by the COVID-19, that banks have to work with you. Excited, John calls the mortgage servicer and inquires about the forbearance he is entitled to. This is great relief for now because he doesn't have to pay his mortgage for 6 months. But let's fast forward to 7 months later. John is back at work, but for the past 6 months, he wasn't able to save any additional money because he was out of work during the forbearance period. And the forbearance actual time frame of 6 months is now up, and the bank or the servicer sends John and Ann their bill. Ann falls over just really frantic because the bill shows Ann and John now owe $15,000 plus $2,500, and it's all due right now in the 7th month. So the $17,500 is what is owed. John is shocked and calls and asks the bank, why? So let's start the dialogue. Bank, that's the 6 months of forbearance. $2,500 times 6 plus a current month of $2,500, totaling $17,500, which is now due. John, well, obviously I haven't been working and I don't have that kind of money. I can't pay that. Is there anything that I can do? Can we negotiate? Bank, sure, we will spread out the $15,000 over 12 months. John, great, thanks. How does that work? The bank, that will be $3,750 each month for the next 12 months. John, what? I don't understand. Why? Bank, 15,000 divided by 12 months equals $1,250. So $1,250, $1,250 of the 12-month payment plan plus $2,500 for each monthly mortgage equals $3,750 per month for 12 months. John, I can't afford that. Bank, sorry. John, can I refinance? Bank, no, because a loan went into forbearance, and if you have an unsatisfactory recent mortgage payment history in the eyes of Fannie Mae and Freddie Mac's current underwriting approval guidelines. John, what can I do? So, as you can see, forbearance is not forgiveness. You owe the bank your payment, whether it is at the end of a few months or it's at the end of the lifetime of the loan. It will have to be paid. We need to make sure that we are actually correctly giving out this information regarding forbearance. You will have to pay it back at some point. So make sure that you understand the entire process. Just remember, there isn't such a thing as free as of right now when it comes to the forbearance. The mortgage servicers cannot sustain this prolonged period of fronting the money that you don't pay them during the forbearance period, and will need to seek restitution somehow. So please speak with the correct people, ask the right questions, read the fine print. While forbearance might be the only option for some, it should not be pursued unless unless absolutely necessary. There are other options that may be offered by the mortgage servicer, such as deferring the entire amount due to the back of the loan. But assumptions should not be made without written clarification. Bottom line, know what you are agreeing to and work with a very experienced realtor and lender who partners together to protect you and give you accurate, sound advice. Please feel free to reach out to my team and I for any advice at all. Let us help you navigate through these tough times and guide you to the right direction. Much love and affection your way. Kimberly Ritter and the Ritter Group.